Welcome to another stage analysis video. It's Wednesday the 29th of March 2023. I'm going to go through some of the major indexes to start off tonight before some of the short-term market breadth. Look at some of the industry groups bell curve the other day, which I hadn't done for a little while for the 104 industry groups that we track using the relative strength rankings, but based on the percentage of stocks above their 30-week moving averages, which gives a good overview of what's going on in the market in terms of the overall position. Obviously, very similar to what I do on a weekly basis with the bullish percent index bell curve, but gives you a bit more detail and is a little bit more visual. So I wanted to do that, as well as have a look at the major some of the mega cap stocks and their positions at the moment, as they've been leading the market in the short term. So we'll see how they're setting up, and then have a look at some of the watchlist stocks. And I think I was going to finish off with a look at a few of the crypto stocks as well, just to finish off, as they're in interesting positions, potential early stage too. So let's get going with the S&P 500 here as normal. I wanted to talk about the expansion in some of the short-term market breadth, which we're going to look at in a little bit in terms of when I do the short-term market breadth indicators in the next portion of the video. But in terms of on this chart here, you can see the percentage of stocks above their 20-day moving average here, so which expanded today much better than it has done recently. We actually got up to 62.2% in the S&P 500, which is the strongest it's been for a little while here, since it started to drop off in February time here. So if we mark it up on the chart, so around this area in here, so relatively lower than we were at that point, but just popping back above the 50-day moving average here. I talked about this being relatively weak when it was at this point here. We got a rally with the S&P 500 moving above its 21-day EMA here, but at the same time here, you can see that the actual percentage of stocks above their 20-day moving average was down in the mid-30s here, which you wouldn't expect to see at that point. So we've now got obviously a much stronger position as it's moved back above its 21-day moving average again. So it's much more in what you would actually expect with the index itself above its 21-day moving average, for the underneath the stocks under the surface doing the same thing basically. If we look at the equal weighted chart, we actually also saw a little bit of expansion today. It's still underperformed in the near term recently. You can see obviously the difference between these two. The same channel here is only just getting back above its 21-day EMA here, and it has started to outperform again a little bit in the near term. We did have this mega cap expansion through the pullback in March here, but still underperforming overall. If we look at the Nasdaq 100, which has been leading in the near term and since the start of the year really, so you can see the expansion versus the S&P 500, and it started to move above the zero line in March. We're now testing the highs. Currently, the Nasdaq 100 is very heavily weighted in Apple and Microsoft. I think we've got 46.5%, somewhere around that level, with just those two stocks. That's in the XLK. In the Nasdaq 100, we've got around 50% of around 50% of the weighting is in only 10 stocks or so, which obviously includes Apple, Microsoft, etc. So Google, Amazon, all of the big mega caps. So we're going to review that a little bit later in the video to get a good idea of what's actually going on in the individual stocks versus what's going on in the index here. You can see obviously testing the top of the range here. It's obviously been noted. It looks very much like the classic investor entry point in the stage analysis method at the moment, but we haven't yet broken out, and this is an anomaly compared to the rest of the market at the moment. So obviously needs to start to clear and push out more convincingly through this 13,000 level, but it is attempting to move into stage 2 at the moment, but still would be very tentative on them at this moment based on what's going on under the surface and the fact that this is only 100 stocks versus what's been going on in the rest of the market. But we will see how that plays out. But we are coming to the end of a month and end of a quarter. So there is obviously that chance that we've got some window dressing going on into the end of the quarter here, with people rotating into various stocks that have been doing well. So there haven't been a lot of push out in terms of breakouts. The watch lists have been thin throughout the month, to be fair. It's been very heavily focused only in a few areas, software and semiconductors especially. So this is the equal weighted version of the NASDAQ 100 to compare against. So if we go back, let me undo that. So if we compare these two, you can see the difference in terms of we're testing the February high here in the NASDAQ 100, but in the equal weight, we're a long way off of the February high still, only testing the early March level here at the moment, so around the 6,000 area. So a lot more work to do in the equal weighted chart, but again, still looking like it's attempting to move out into early stage 2. This is a potential early stage 2 breakout through here, and it's attempting to regain that breakout level again, but not yet through obviously this major resistance zone. So to say it's in stage 2 convincingly, you obviously would want to clear all of this overhead resistance, but it is attempting to move into stage 2, and you can see that outperformance that we've had since the start of the year with that change of behavior. If we look at the NASDAQ composite, very similar behavior to the equal weighted chart there. You see it hasn't yet got anywhere near the February high here, but has been pushing up since the March pivot low here. So March 13th, I think it made the low and started to turn back up again. Look at the Russell, on the other hand. It's obviously more heavily weighted with the regional banking stocks that have been obviously plaguing the market over the last few weeks or so. So they've been weighing heavily the financials on the overall market, and the Russell has taken quite a big brunt of that, really. You can see it did get that undercut move recently here, and has attempted to rebound, not yet back up at its 21-day moving average. You can see relative strength still remains fairly weak here compared to where it was back in January, February time, where it was outperforming. So it started to underperform through mid part of February here, and still below this major resistance zone at the moment. These two significant bars here, where it started to gap down from the financial crisis, basically from what was going on in the banks. We still not managed to bounce back up into there. So if this can rally, but same as with the banks themselves can rally, then obviously would help the market substantially. And I'll talk about that in a little bit in the video. Go to the VIX at the moment, you can see this has come off considerably low. We had this shock move, and it has been drifting lower, and it's now dropped back below its 20% level. So again, back down into the most recent lower levels. It gets below 20. It's in a lot more positive position normally, but it is obviously starting to get a little bit more extended to the downside here. So a rebound wouldn't be out of the question here, which could potentially stifle any kind of breakout attempt here. Okay, let's